Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 18th, 2025, and we're diving into the latest earnings report from Cohen Steers, a leading global investment manager specializing in real assets and alternative income. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss Cohen Steers' performance this quarter.
Revenue and profitability overview. Let's start with the top line. Cohen Steers reported a revenue of $136.1 million for the second quarter of 2025. John, how does this compare to their previous performance?
Well, the revenue increased by 1.2% from the previous quarter, which is a positive sign. However, the operating income saw a slight decline of 4.1%, bringing it to $43.3 million. The adjusted EPS came in at 73 cents, slightly below the forecast of 75 cents, but still a solid performance considering the market conditions.
And what about their profitability?
The operating margin was 31.8% on a GAAP basis and 33.6% when adjusted. This indicates that while there are some pressures, the company is managing its costs effectively to maintain a healthy margin.
Assets under management and market dynamics. Moving on to assets under management, Cohen Steers reported an ending AUM of $88.9 billion. Can you break down the dynamics here, John?
Absolutely. The AUM increased by 1.5% from the previous quarter, primarily due to market appreciation of $2.3 billion. However, they did experience net outflows of $131 million, which were partially offset by these gains. Distributions also played a role, totaling $762 million.
How should investors interpret these figures?
Despite the net outflows, the increase in AUM due to market appreciation is a positive indicator. It shows that the underlying investments are performing well, which is crucial for long-term growth.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. What are the key highlights from their expense management?
Employee compensation and benefits increased to $56.6 million, primarily due to accelerated vesting of restricted stock. General and administrative expenses also rose to $18.1 million, driven by talent acquisition and business development costs. Despite these increases, the company has maintained a strong operating margin, which is commendable.
And looking ahead, what can we expect from Cohen Steers?
The company remains cautiously optimistic about the future. They are focusing on strategic investments and operational efficiencies to drive growth. While we don't have a specific statement from the CEO, the overall sentiment is positive, with a focus on navigating market challenges effectively.
EPS forecasts and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting 75 cents, but the actual adjusted EPS came in at 73. What does this tell us?
This slight miss of €2 cents against the forecast isn't overly concerning. It reflects some of the challenges the company faced this quarter, such as increased expenses. However, the overall performance remains strong, and the company is well positioned to meet future expectations.
With only one analyst providing the forecast, how should investors view this?
With a limited number of analysts covering the stock, there can be more volatility in expectations. Investors should consider the broader context and the company's strategic initiatives when evaluating their investment decisions.
Key takeaways. As we wrap up, Cohen Steers has shown resilience in the face of market challenges with a revenue of $136.1 million and an adjusted EPS of 73 cents. Despite a slight miss on EPS, the company maintains a strong operating margin and a growing AUM. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing Cohen Steers' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Cohen Steers' performance in the comments below. Until next time.